Hey, this is Bert Salazar. I hope you and your family are doing well. I got a phone call a couple of days ago, and I've been getting so many phone calls now, with this issue with the financial markets and the financial virus, the 2020 financial virus, as I call it, with the coronavirus and so forth. But I did get a phone call from someone who's a listener to my podcast channel, which I do a podcast every single week. And I think we've done 103 episodes already. So feel free to go into your podcast and you can search for your tax-free life podcast channel. And that would be my channel. And there's a lot of really good information for you and for your family there. But one of the questions that he asked me was, now that he's taken all these losses out of his retirement accounts, is it a good time for him to sell his retirement accounts and the assets that he's got inside those retirement accounts and then take a tax deduction for the losses? And I said, well, first of all, you can't take a tax deduction for the losses. And he says, Bert, but I don't get that. Why not? He had some stocks that he had sold a couple of years ago, and he was able to take a capital loss, and then he offsetted those losses with capital gains. And I had to go back and explain to him that, when it comes to retirement accounts, number one, there are no capital gains or capital losses inside your retirement accounts. And I don't care if it's an IRA or 401k, a TSP, a 403b, any of those retirement accounts. Even if you go on the Roth side of the house, where there's a Roth IRA, Roth 401ks, the taxation on traditional retirement accounts are based on ordinary income. Now, Roth IRAs and Roth 401ks pay no taxes, and that's a good thing. Those go into the tax-free bucket, and I've done a lot of videos along those lines as well. But the short video for today is dealing with losses in your retirement accounts. So he was truly under the impression that if his 401k became a 201k, and all of a sudden he sold the assets in that 201k, that he could take a capital loss on the difference between the 401k value of his assets to the so-called 201k, because he may have lost 50%. At the end of the day, it doesn't matter what your losses are in a retirement account, because the contributions to those retirement accounts are pre-tax. The IRS does not allow you to take a capital loss. You cannot do anything along those lines. So if you had, let's say, $200,000 in a retirement account, and overnight that retirement account is down to $100,000, and you liquidate the account, well, you're going to pay taxes, ordinary income taxes, which is the highest possible tax that you can pay on those $100,000 that are remaining. The other thing that you need to consider is the following. If you really didn't do a good job in protecting your retirement accounts from a bear market, like the one that we're going through today, you know what? Shame on you, because you had all the ability to do that. I've been doing videos for the last 3 years, urging a lot of you to take a look at your retirement accounts and make certain that you place certain protections. Just like jumping out of an airplane, you would want to do it unless you want to commit suicide. You would want to wear the best possible parachute when you jump out of that airplane. The same thing happens with your retirement assets. You want to have the proper parachute surrounding those retirement assets. So whatever happens, it doesn't matter the altitude or the wind velocity, whatever it may be, that you can have a safe landing when you hit the ground at some point in time in the future, and the ground would be your retirement. So from that perspective, be very careful. Now, it could be a good time for you to do some things with your retirement accounts, not only from a protection standpoint, but also from a future growth standpoint. But always remember that when it comes to your retirement accounts, whatever you have in those retirement accounts, when you pull the money out, they're going to be fully taxable to you. Now, there may be a way, and you can in a way that you can offset some of those tax liabilities, but this is not the video for that. If you have any tax questions regarding your retirement accounts, please feel free to reach out to me. You can call me at area code 786-766-1042. You can also send me an email at Bert, B-E-R-T, at GablesTaxGroup.com. And always remember that my goal for you and for your family is to kind of help you change the way that you see things, because when you change the way that you see things, the things that you see change. So again, thanks very much for a little bit of your time today, and I'll talk to you soon. Take care.